Welcome to the Atlanta REALTORS Rundown, the voice of real estate in Atlanta. I'm your host, Neel Midha, here to bring you the latest trends, insights, and success stories in Atlanta. I know that Halloween has passed, but I have a very big treat for everyone who's going to be listening to this podcast. I'd like to introduce you to our guest for today. It's Lawrence Yun. Lawrence Yun is the Chief Economist and Senior VP of Research at the National Association of REALTORS. Lawrence oversees NAR's research group, produces key housing market forecasts, and is one of the most respected voices in real estate economics nationwide. His insights guide policymakers, industry leaders, and realtors across the country. We are honored to have him with us today to break down what's happening in the national market and what it means for us in Atlanta. So first of all, Lawrence, I'd like to thank you for agreeing to be on the podcast. I know that you're very busy running around doing lots of things, and I would like to also say that you are very, very responsive in terms of communicating. So I want to say thank you for that, first of all.
Well, happy to join, Neil. And you came up to me at the when I visited Georgia Association of Realtors meeting down in Atlanta.
That's right.
We talked about a few things, and you said, "Well, could I be on podcast?" I'm glad that it worked out. So here we are.
Yes, I'm very happy for that too. So I understand that you've just come back from NAR NXT, the Realtor Experience. How was the conference?
The event was held in Houston. This is, I think, one of the first time that NAR held an annual meeting in there. One thing about Houston market is that they produce a lot of homes because they don't have zoning restriction. So I was quite surprised as I was preparing for the event, running some numbers, that Houston did more home construction than all the major California big cities. So you're looking at San Francisco, Los Angeles, Orange County, San Diego, all that combined. Houston produced more homes than the California big cities, which is the reason why Houston is more affordable and they don't have any housing shortage issues.
That's amazing. I hear a lot of technology companies move to Houston too, right? So has that been part of the influx too?
I mentioned that as a sort of the preview because in the area where they're producing a lot of homes, in sometimes there could be a temporary price decline. Now, Houston and Atlanta has some relationship in that regard. The job growth is very strong in the state of Texas, certainly in Georgia, job growth with many new companies relocating to the region. Many foreign companies who want to have access to the US market are basing essentially in the southern states. So the job growth is very, very good. But at times, there could be temporary price decline just because there is a quite a robust construction activity, but that will be easily absorbed over time just because so many people are moving into Texas, so many people are moving into Georgia.
Right. And just even talking about some of the migrations that are taking place into Georgia, I know that we've had an increase in the number of people moving to Georgia, but I think from a net domestic number, it's actually decreased over prior years. So it seems that we have more international companies moving here. Is that a trend that you're seeing in other places too?
I think, there are some years where there could be some temporary decline in net domestic migration, as you refer to, Neil, which means that, how many people from Ohio are moving to Georgia
Right.
and vice versa. So there used to be consistently positive net migration for Georgia, but maybe because, Atlanta region traffic jam, sometimes housing shortage, so people reconsider. But as long as there's more construction activity, I mean, I'm actually quite fascinated with Fayette County region, which
Mhm.
is southern Atlanta region, where they're developing so much new homes. So that could be some growth area. Northern part of Atlanta also always has consistently seen, quite sizable growth, preference for people wanting to live there. So you have variety, but I think whatever 1 year fluke in the data where people may not be coming to Georgia, I think that is a fluke. I think people will continue to show up.
Okay. And that was my another question. I was going to say whether you think that trend is going to continue, but clearly it could be a blip. No one really knows, right?
Yeah. Sometimes, when there's one data point where you just an anomaly, but
Right.
the long-term trend clearly shows that people are moving to the southern state, especially from the northern states.
Yeah, perfect. And I did too. So I'm part of that group. Um, I know that a lot of agents in Atlanta they'll attend like the local realtor events. They'll attend the Georgia conferences. Why do you think we should be attending like the NAR, the larger conferences too? What would people get out of that?
I'm glad that first you attended, the Georgia Association. You are very active at Atlanta Realtors, because first, people who are participating are essentially providing the direction for the association, which policy is important. I don't know all the specifics of state and local issues,
Hmm.
but the Georgia Realtors, Atlanta Realtors, they're very active in trying to get certain local legislation or state legislation in place. Trying to participate and be part of the voice, and also trying to get information from people who are specializing in certain issues. I mean, certainly I look at economic data, happy to share that information, and people in the audience, realtors who gather that information, able to share that information with their clients or potential clients. One of the happiest moments for me is that realtors come up to me and said, because of your information, I was able to increase my business activity XY%. So it's very pleasing to hear that type of comment coming out. So I think people who participate has more knowledge. It certainly doesn't hurt. I mean, it's a time away from work. One is spending time in class or in event. So it's a little bit time away from actual doing open houses and things like this, but I think it's overall an investment that provides return.
Yeah, and I would agree. And I think even outside of the economics piece, any of the training, new technologies, we need to be able to make sure that we're staying in the forefront of the industry. And, all of our clients are asking, so what's happening in the industry? Where's the economy going? So obviously listening to people such as yourselves arms us with that knowledge that we can then talk about this from a safer place. Um, So, talking about going back to the NAR NXT, I know that you noted that there was going to be potentially a 14% rebound in homes nationally in 2026. Do you see the same thing tracking similarly in Atlanta?
The Atlanta region generally would be outpacing the national. So I'm glad first you asked the question related to Atlanta, because national forecast is just national. Some market will do a little better, other market will do worse. So there are local market variation. And generally speaking, the area that would outperform are the areas where they're outperforming in jobs. They are a little more affordable, but it's because you can find a job, say in New York City, or I am here in Washington, D.C., one can find a job, but one can still not buy a home
Right.
because of the affordability challenges. But in Atlanta, at least there is a whole variety of price points where people can consider as to whether they want to enter or wait 2 more years to save up for more down payment for better home. So at least Atlanta provides more options compared to say very expensive markets of California or New York City.
Sure. And touching on affordability, right? I mean, affordability is affecting everyone everywhere. What can we be doing to make places more affordable? What kind of ideas have you been discussing on those?
We hear from the realtors across the country. There are various committees so getting involved. And what our realtors have indicated is we need more supply. I
Hmm.
know that President Trump has floated the idea of 50-year mortgage. First, I think it's not that bad. First, some people may not be qualified for 30, but they may qualify for 50. And I think it's better to be in home ownership rather than renting. And it's not a 50-year trap, because we know that people buy a home and after 5 years, they look for the next home. So maybe over that 5 years, they accumulated housing equity from price appreciation and use that for down payment on their next home. People float out some of the demand affordability part, like 50-year mortgage, but that's not the game changer. The real game changer is increasing supply. We need to make sure that the zoning regulation is not too restrictive. We need to assure that, say, capital gains exemption. Many people in Atlanta, home prices have appreciated in the past decade, such that now if they sell their home, they may have to pay tax, which is counter to the original spirit of the law, which was passed 30 years ago, to say homeowners, you sell your home, the profit is yours.
Right.
As people, realtors know, 250,000 exemption for single, $500,000 for married couple. And some people are beginning to reach that limit, and more people are reaching that limit with each passing year. So we want to say, well, just out of fairness, out of the spirit of the original legislation that homeowners should not be paying this so that we have more inventory onto the market. Getting that more inventory is critical.
Right, and I think you touched on that earlier with Houston, right, where you said that because they don't have some of the zoning issues, that they were able to build a lot more houses there, as you saw at the recent
Uh,
conference.
yeah. So Houston is quite an exception, having no
Right.
zoning regulation. But I think some community wants to have certain character, about the business community. So it's up to the local preference of it, but don't make it too restrictive. Don't make it so that, the builders say, oh, I don't want to build in this city. It takes forever to get housing permits, or it's so costly. I want to go someplace else. Well, Atlanta do not want to be that. Atlanta want to
Absolutely.
assure a certain degree of zoning, but still allow for more production of homes.
Okay. Talking about more of the inventory, do you see inventory levels increasing over the next year or so?
Yes, and we are already seeing that. We have about 20% more homes on the market this late autumn versus exactly 1 year ago. And the reasoning is, even though people were discussing lock-in effect a few years ago, people have
Hmm.
3%, 4% mortgage rate, they would never sell their home. But now we are seeing some people are changing their mind, and they're changing their mind because of life-changing events. Finding new job in different part of the town, commuting has become impossible, or maybe the house is a little too small given that they have two additional child in the family. Maybe some people are retiring and wanting to downsize. So life-changing events always occur, and therefore, over time, expect the lock-in effect to be not as strong. And I think we already turned the corner. So I expect more inventory. Great news for potential buyers.
Right. And I think also with the fact that so many people have got a lot more equity in the homes too, so they're able to take that and then put that into a new house too, so that it helps with the future payments.
Oh yeah, yeah. Putting larger down payment means lower monthly payments. So good thing that homeowners are able to do that. I think what's frustrating in today's economy, Atlanta and the rest of the country, is many potential first-time buyers, the renters who've been renting. Maybe they had the financial capacity, but they were not in an urgent mode to buy, or maybe they just simply cannot buy because of affordability challenges, and that is a tough situation for many young adults.
Right. And I think also when you look at it from a wealth perspective, most people that own homes, their increases in wealth is substantially larger than people that I think are renting too. So another big incentive for people to move away from renting and try and, get onto the home ownership ladder if they can.
If one wants to succeed in America financially, just financially, one has to own a home because data clearly shows that homeowner typical wealth is substantially larger than renters. I think the realtors intuitively know, renters are simply wasting their money, but that's what the data actually shows. So own a home, own a property in order to build wealth in America.
Absolutely. So, there's been a lot of fluctuations within the tariffs, right? Constantly going up and down. What kind of impacts have you seen with the tariffs on construction costs and home prices?
Home builders are indicating that, some of the construction material is more costly, or some of the appliances to place on it is becoming more costly. But builders somehow are able to contain the overall cost. The newly constructed home median price is actually about the same now as 3 years ago. So even with tariffs, the newly constructed home prices, maybe they're building smaller size home or building on a smaller lot to compensate for some of the increase in material costs. But overall, at least the entry level homes that's being built, it's not appeared to be having too much of an impact. And also, when the tariff was first introduced by the White House, some people panicked. But it seemed like over time, what's happening is rather than tariffs, it's actually trade deals over time. So initially place higher tariffs, but let's try to negotiate to lower the tariffs. You buy some American products, and then we can lower the tariffs that's coming in to the U.S.
Right. And that's where we've seen some of the fluctuations, right? Where the tariffs have gone up for a bit and then they've come back down as they've negotiated some of those broader deals.
Yeah, that's right.
Um, in terms of the impacts with the tariffs, have you seen any regional differences?
Not really. I think the regional differences is I think mostly related to local issues. I mean, it has become very difficult and expensive to build in California. So even California legislatures, I mean, they're trying to say, well, you cannot constantly place lawsuits to the developers if they want to build, say, a condominium or multifamily housing unit near the metro centers,
Hmm.
because there's clearly housing shortage in California. And the reason for the housing shortage is sometimes one wants to just shovel the ground, and then there is an environmental lawsuit that stops that.
Right.
So at least they're trying to mitigate some of that. So we are beginning to see all communities across the country begin to consider more supply as a solution to housing affordability.
And that's great because it's something that's desperately needed, I think, by all. We've just finished with the government shutdown, and I know that the government shutdown impacted areas where there was high percentage of federal workers and contracts, or even rural areas because of programs like the USDA. Have you seen or detected any impact in Atlanta or Georgia due to the shutdown?
Well, Atlanta, I'm from Washington, so the background is one of the DC buildings, and you may
Right.
hear some sirens, police sirens. It's constant thing here in Washington. We're actually a few blocks from the U.S. Capitol. DC area is most impacted, but then you have places like Atlanta, Center for Disease Control, they
All
are,
right.
uh, but overall, in terms of government shutdown and how does that impacts real estate broadly, so when there is a government shutdown, some of the mechanics actually do not work. You mentioned the USDA rural mortgage loans are not available. Some areas where it requires flood insurance, well, those were not available, so you cannot get the mortgage origination. And there could be some delays regarding IRS income verification. We don't want people to have mortgages without income verification, so we need that
Correct.
process. So when we looked at what happened last time when there was a long shutdown back in 2018, 2019, home sales got pressed down. But once the lockdown finished, home sales bounced back up. I think some of the delayed transactions that could not get completed simply are showing up once the government shutdown finishes. So be prepared. Maybe you will see a little more robust winter activity this time compared to previous as we're coming out of the government shutdown.
I'm sure we'll all look forward to that.
The
So yeah.
one caution, we may have another government shutdown at end of January. I think there's second
Oh,
negotiation that needs to take place. Hopefully, we don't encounter that. People in Washington are adults and trying to say, let's serve the American people rather than politics.
right. And let's hope if it is, again, it's not as long as this one, because I know that this has been the longest one, I think, on record. And, and
Yes.
and similar because of that, I know that there was some missing job data, I think by BLS, is it BLS, I believe. So with the lack of that information, do you see any ripple impacts, effects with respect to housing sentiment or even, economic projections based on that?
The government data was not released during the shutdown, so we are essentially running blind on certain areas like job information. The most recent information was, at least during the shutdown, was as of August, but just late November, they began to put out the new fresh data on it, which shows a little comfort that jobs are still being added to the economy. Not a robust job creation, but at least overall, even with the slashing of the government job, there's still more private sector employment. But the numbers are much softer now than before. So it does put a little blind side onto the overall analysis. But the private sector data is always working. Like, we produce home sales data. We have not missed on that.
Hmm.
And then the like University of Michigan consumer sentiment data that came out during the shutdown, which was not pretty. Consumers were saying, we are not happy about the direction of the economy. Maybe the shutdown was contributing factor to that.
Right. Okay. In terms of mortgage rates, right? We've seen spikes, and at least in Atlanta, we saw in September a rise in mortgage applications, and then towards the end of Q3, it came back down again because of the fluctuation. The market's focused. Where do you see mortgage rates going in 2026?
So the mortgage rates had been 3%, 4% in the early years of COVID because of the very loose monetary policy
Hmm.
by the Federal Reserve. Then they hiked the interest rate aggressively, which then flipped the housing market, mortgage rate going to 8%,
Right.
and then sort of stabilizing near 7% condition. So that's where the affordability challenges are really happening because of higher mortgage rate condition. But mortgage rate, which have been about 7% in the first half of 2025, I think it will be about 6% by once we hit the spring season of 2026. So that's 100 basis point lower. It's not the super low, but I think after 3 years of this 7% norm, will view it favorably. So consider 6% average to be the normal. Week to week, some weeks it could be 6.3%, other week it could be 5.7%.
Right.
Anytime it's under six, take advantage. Those are good opportunity.
Perfect. Perfect. Um, There was recently Mark Zandi from Moody's Analytics. He recently projected in different states around the country about where he believes that they are from whether whether they're treading water or at risk of recession. And I think Georgia he'd highlighted as an area that could be at risk of recession. What's your impression of that? Do you agree?
Well, Georgia certainly has more international dimension to it. I mean, even the stadium is called Mercedes because German company wants to be located. And then you had was that a Hyundai auto plant near
Hmm.
Savannah where there was an ice raid of a
Yes.
part, which at least shows that there were Korean companies located in Georgia. By the way, I spoke with realtors down in Savannah about this issue, and they're essentially saying that the workers who were flown back to South Korea will be returning in 2026, but with the right papers. So it seemed like the White House is just saying that we want the papers. As long as you have the proper documentation, it's all good. We want work permit. We want foreign workers to come to America, provide the necessary training for American workers and so forth. We just do not want undocumentation. So that's what it appears to be. But you have many foreign companies wanting to come to Georgia. And I think Mark Zandi's sentiment was if we have a trade war, certainly any states that has more exposure to international company will suffer. So I think he's based on that. I mean, I'm just trying to, we will let Mark Zandi speak for himself, how
Right.
what he said, but I'm not too concerned about the international companies as long as they provide the workers with the proper documentations.
Okay, that's very, very reassuring. Um, Going back to new construction, I know that through the first 3 quarters of 2025, Metro Atlanta region recorded about 15,518 new residential permits, which is about 10% down compared to the same period in 2024. How does this compare nationally, and what are your predictions on that for 2026?
Nationwide, it is down, but not to the degree that you mentioned in Atlanta. Nationwide, it is down only about 3-4%. So Atlanta is seeing larger decline, and it could be just on the multifamily side. There has been over construction of apartments. Rents are not rising, at least the new unit compared to, say, 1 year ago, you compare the rent situation. So given so many empty vacant units, maybe some developers are saying, oh, let's take a time out. Let's make sure the empty units gets absorbed before we consider more construction. But Atlanta historically over a longer time span always produce more among the big cities compared to others. So I think again, this is like a 1 year temporary situation. And also because of robust apartment construction, you have the rent situation at least beginning to turn downward after robust rent growth in a few years ago.
Right, because actually we've seen, with respect to build to rent communities and large multifamily, we are starting to see that on the rise. So, would you say that that's a sustainable trend, or would you see some of that changing too?
Well, firstly, I definitely want to see home ownership rather than renting. So when I
Right.
see a neighborhood of single-family homes, one naturally would assume that they are owners. But some rent-to-own, developers have been very active building single-family homes to
Hmm.
rent it out. And it's been predominantly in few cities, Atlanta being one, Jacksonville, Memphis. So it's only a few cities where they are very active and do we try to limit or are they getting special tax preference? For example, homeowners, first-time buyers, today they could, in theory, take the mortgage interest deduction, but many don't because of the larger standard deduction.
Hmm.
But the developers, they get to fully deduct all their interest on development. So is that fair or not? So we are looking at some issues to see what are the preference for the realtors. Should we try to at least advocate for restricting some of the big institutional investors from, gobbling up single-family homes for rentals? Yes. So we are looking at all that angle, but we are getting a lot of feedback from realtor community about whether NAR should pursue that or just leave it alone. But we are still gathering information.
And that's great because obviously, as you said, if they're building more homes for rent, then it does reduce. I mean, we've talked about lack of inventory too, right? So that adds to that for the people that want to be able to buy a home. If it's just build to rent, then it makes their supply for them even less.
Yeah.
Um, from a tech, you can't have any conversation these days without talking about AI, right? And so, in terms of AI, how is AI currently impacting the real estate industry?
This is not really my area, but nonetheless, one advice is that you cannot stop technology. Technology will keep going even faster in the future. So one has to look at all the possibility. Certainly realtors are using AI in terms of their marketing presentation and others, but also from consumers. Are the consumers now able to just tap the AI and bypass realtor for certain information? But one comforting part is that we collected home buyer seller recent home buyer seller survey and asked them, did you work with the realtors or did you do it by yourself? And do-it-yourself community is less than 10%, and that has held down at that level, which means 90% of consumers want to work with the realtors. And we ask, why do you want to work with the realtors? It's a major purchase, and they want to trust their realtors given so much complexity. Why am I signing this document? Why am I signing that document? Am I missing some property? So I think the consumers are saying major purchase, I want to work with a professional, and they give high satisfaction rating after having worked with a realtor.
Yeah, and I think you're right. A lot of the data has shown that, and I think people that I've spoken to, it's the same thing. They would much prefer to have the guidance because if there's an easy deal where nothing goes wrong, could they do it themselves? Maybe, but how many of those sorts of transactions do we see, right? And so, with the access of resources, interpreting information, being able to provide that information to the people, I think is a service that people are recognizing. Um, still staying on tech and AI, in Atlanta, Microsoft has launched its Fair Water AI Superfactory data center in South Fulton. DigitalOcean opened Atlanta One, a GPU optimized data center in Douglasville. And in this region, we're seeing a rapid expansion in data centers. How will this expansion impact both commercial and residential development?
First, that's a good sign. So I was unaware that Microsoft was expanding in the Atlanta region. I mean, certainly they can tap into the human capital. You have Georgia Tech,
Hmm.
what are
Yes.
the top engineering school in the country. So in the data center, it just means that more technology sector employment, more technology. Because Atlanta, great thing about Atlanta, it's so diversified. You have the medical community, you have the technology. So you have so many things going in Atlanta. So I think that's an added boost. One just have to make sure there's a sufficient public infrastructure, things like the highway system, the road construction. I know it's difficult during the construction part, but one needs to expand and widen and provide more, or even metro or say dedicated bus lanes so that people
Hmm.
are not stuck in traffic. Things like that all needs to be considered.
Yeah, and I think a lot of the counties, when they're looking at building new things, are looking at the infrastructure at the same time, right? Because it needs to be. You need to have the transportation hubs. You need to have access to all of the shops and everything else that people are going to need where they're going to be living. So I'm glad to see that we are looking at that. But I think you're absolutely right on that. Um, so in terms of, wrapping up almost everything that we've talked about, right, all of these different elements, taking all of that into account, what are your expectations or hopes for Atlanta heading into 2026?
Yeah, yeah. So I'm glad, you referenced earlier about 14% forecast in unit sales, which was based on my statistical modeling. Some market to do better and worse. But my forecast will not be perfect. So maybe it's only 10% unit sales growth, or maybe 20% unit sales growth. Don't be surprised if that happens. I don't see a price crash. I think the prices will sort of level off for maybe 1 year time because we need to make sure that people who are challenged on the affordability side as they are entering the market, and we are getting more supply situation. But 20%, 10%, or something in between unit sale growth, realtors need to be really prepared for that. So as the mortgage rate, I mean, I'm basing on mortgage rate going to about 6% average rate. And my modeling suggests that additional people qualify for a mortgage. And even if the job market is a little sluggish, you still have 80% of the population who consider they have a job or even secure job, and they will respond to falling mortgage rates.
Okay. And towards the 6%, do you know when in next year you're expecting us to be able to get to that?
Right now, we are very close to that already. So,
Right.
November, December, it looks like about 6.3% mortgage
Yep.
rate, which is better than 7% in the first half of the year.
Sure.
And I think this trend will continue. Federal Reserve will probably do maybe three more rate cuts before the end of 2026. December rate cut, 50-50 chance, but whatever they don't do is going to be simply pushed into 2026. Now, mortgage rate is never one-to-one relationship with the Federal Reserve rate cut, but directionally, at least it helps out. And then I think 6% mortgage rate is not the super low, but it is better than what we experienced in the past 3 years.
Right. And you mentioned the Fed rate doesn't directly impact the mortgage rates, right? So as a realtor, what kind of factors or signals should we be looking at to be able to get a better feel for where we think where the rates will be going?
First thing I do each morning is look at the 10-year Treasury yield because mortgage rate is more tied to the 10-year Treasury yield. But the 10-year Treasury yield is dependent on many, many things. What the Federal Reserve may be doing. There's something called quantitative tightening, which is like buying mortgage-backed securities or not buying it. That also has an influence on mortgage rate. Federal budget deficit. If the government has to borrow a lot of money, there's less mortgage money available for ordinary people. Or even say tariff revenue. If the tariff revenue cannot be used for deficit reduction, that can also lead to a little higher interest rate. So many factors go into 10-year Treasury yield, but mortgage rate is more tied to 10-year Treasury yield rather than Federal Reserve decision regarding short-term rate cut or not.
Perfect. Perfect. So with just on a personal note, so with a lot of the conferences, interviews, and demands on your time, what do you do to relax?
Oh, so I'm glad that I have a great family support. That's one. But the other part is I enjoy um, reading books. I took an interest in sort of trying to understand sort of history. It's almost like a zigzag puzzle. One sort of knows sort of the basics of history, then all the details you begin to fill it in. I found a little joy in that. And then outdoors, if I can time to just ride bicycle, nothing serious, just being outdoors,
Right.
get some air, fresh air. So those are my hobbies.
So in terms of the last book that you read, or what was the last one that you found really interesting?
Well, the book that I'm constantly reading is that multi-volume book that was produced more than 100 years ago by a person named Durant. That's his last name. And the title of his series is Civilization. So he talks about, from the ancient Greek civilization, Chinese civilization, India development. So he goes on to many, many parts. So I've been just from time to time reading this and that. And then also a more recent book that I read was on Cuba, how Cuba pre-revolution, post-revolution. Right now, Cuban economy just dying, and having under communism for just a couple of generation, and then there's not enough food. Before, it was even more exciting place to visit for many Americans. To say going to Hawaii or go to Cuba, and many people chose to go to Cuba, but of
Right.
course it's not the case anymore. So one also wants to see, but I just find interesting how country can shift from one to the other quite quickly.
Right. So again, I just want to really thank you very much for being accessible, as I mentioned earlier, and willing to be on the podcast. And I hope you get to relax and enjoy the family and maybe a bit of book reading and cycling during the holidays. Um, so If you have not subscribed to the Atlanta Realtors Rundown, please make sure you do that so you don't miss out on any future episodes. If you'd like to see if we can get Miss Dr. Yoon back on the podcast, or if there's any other topics you'd like to hear about, please leave a comment at the end of the show. I'd like to thank you, Lawrence, again for attending. This has been very informative. And to all of the listeners out there, bye, y'all.